Friends, let us start a new topic, taxation of charitable and religious trusts. Of course, this is also one topic we will also be taking up in PCC or IPCC. In fact, here there are only three sections: section 11, section 12, section 13. See, section 11 describes what? Basically, it describes which incomes of a trust or the association or the entity which is carrying out some charitable activity is going to get exempted. And in order to get the exemption, what are the conditions to be complied with? This is fundamentally what we are going to learn by study of section 11. And in section 12, we will see what is a procedure for registration. Then in section 13, we will see what are the transactions which are kept under the prohibited category and who are the prohibited persons. See, as such there is no prohibited person. Only thing is, when you carry out transaction with such category of persons, it must be done at arm's length price. See, when we notice previous suggested answers, what I found is, this topic is a compulsory topic from the final point of view. Very rarely examiner is missing the question from this particular topic. That means this 4 hours of lecture should enable you to get 4 marks straight. That is the objective or the goal which we are trying to keep for ourselves. Now, charitable trust taxation, what is so important about it? See, today the definition of charitable purpose, year after year for the past 3 years, is undergoing some or the other amendment. See, generally where the amendments will come, where the existing law has got some loophole, to plug in that loophole and to carry out the purposive intent of the law, generally the amendments are coming. Of course, for new aspects also the amendments will come, but what my observation is, at least 70% of the amendments are carried out with the intention to plug in the loopholes which are there existing in the law. So, in that context, since there is a change in or there is an amendment in the definition of charitable purpose, this definitely becomes an important topic. Then friends, we have the concept called as anonymous donations. When an educational institution or a temple is going to get anonymous donations. What do you mean by anonymous donation? Where the name of the person is not available, or the PAN number is not available, address is not there, or the one which is there is not correct, then such kind of the donations becomes anonymous donations. When I am going through the law, what I found is, today law to a greater extent looks at the practical difficulties. See, somebody did a crime, go to Tirupati and put in the Swami's hundi some 7 crores back. He will not stand there to give information regarding how he got, from which sources he got this income to put it in the Swami hundi. But there is definitely a kind treatment for such kind of donations. Barring that, anonymous donations are going to get taxed. With this, let me get into the topic proper. Section 11.1. Section 11.1 discusses about which incomes of a charitable trust are going to get exempted or which are not going to get taxed. See, income derived from property. Income derived from the property held by the trust, which is wholly for charitable or religious purpose, to the extent that income is applied for charitable purpose in India. That is most important. This charitable activities need to be carried out in India, failing of which this exemption is not available. Of course, what the law says, to the tune of 15% of such income, they can keep aside without making application, and they can keep it for their future application. But the only thing in the law is, whenever you have accumulated income, such a accumulated income necessarily need to be invested in the investments prescribed under section 11.5. So one thing we are sure, we started with what? If there is a property for a charitable trust, then income generated out of that particular property gets exempted provided it is being applied for charitable purpose in India. And to the tune of 15%, it can be accumulated for future application. Then, coming to the point of voluntary contributions, what your 11.1 says, that is, voluntary contributions, donations are to be categorized into two categories. One is corpus donations, another is the general donations. What is a corpus donation, friend? The one which is given with a specific direction, that is called as a corpus donation, and corpus donation is a capital receipt and it is not a taxable amount. Coming to the general donations, what we say? General donations, to the extent they are being applied to the tune of 85%, it will not get taxed. What I mean is, when you are receiving 100 rupees of the donation, 15 rupees you can accumulate for your future application. But necessarily in the year in which you are receiving that 100 rupees, you have to apply 85%. Now, the point here is, this is what the core content of the law. But every rule comes with certain exceptions. What is that exception? Practical difficulties are coming in the exceptions. What is the first practical difficulty, which through the explanations the law wanted to address? Let us suppose Krishna Reddy, who is a student of Mr. Chakravarti, got qualified as a chartered accountant, gone to America, settled there in America. At the age of 40, Chakravarti is delivering the lectures on taxation. At the age of 60, Chakravarti is thinking of delivering the lectures on Bhagavad Gita. On one such occasion, Mr. Krishna Reddy came with his family. Then after the lecture on Bhagavad Gita is over, Mr. Chakravarti told, Kalyan Chakravarti Educational and Welfare Society want to start a cancer hospital. So kindly make generous donations. Immediately Mr. Krishna Reddy, this has all happened, let us suppose, on 28th March. He is standing up and saying, Sir, I am completely with you. My donation I am declaring openly 1 crore 50 lakhs. What is it? 1 crore 50 lakhs. Immediately he gave a check on March 29th and I encashed it on March 30th. But is one day is enough for me to make an application of 85% of this 1,50,000? Practically not possible. So that is the reason why explanation 2 says what? In these type of situations where it is being received at the fag end of the financial year, in case if you are not able to make an application, then we will allow you to make an application till the subsequent previous year. Let's suppose March 31st, 2012 is the financial year ending. March 28th I received. Then I can apply the same till 13th March. March 31st, year 2013. In another situation, just Krishna Reddy announced that I am going to give. I am looking at Krishna Reddy's spouse. Already she was cautioning with her beautiful eyes. What you are doing? Right. But then Krishna Reddy could not control his emotions and announced it. Here what happened? We have enthusiastic Harita with us, who says, Sir, I will cut the receipt, and it put in the hands of the Krishna Reddy. Having looked at the beautiful instructions with the beautiful eyes by the wife from the dais, I already cautioned Harita, Harita, let that amount come, we will cut the receipt. No, no, sir. Krishna Reddy, I know for the past several years, in case if he commit, there is no problem. He will not deny that. So I could not stop Harita first. So she cut the, who is Harita? Our accountant. She cut the receipt and gave it to Krishna Reddy. Years, सालों गुजर रहे, कहाँ है मनी? नहीं आ रहा. On the other hand, if this explanation is not there, when I am maintaining my books of accounts and mercantile system, department is after me. Income got accrued, you have not applied. कहाँ से लाके अप्लाई करूं? ये practical difficulty सोच के, what the lawmaker said, in case you are not in receipt of the income, then this application of 85% need to be made either in the year of receipt or in the immediately succeeding financial year. Let us suppose Krishna Reddy gave us in the year of 2016 and 17. Then we can apply either in 16 and 17 or in 17 and 18 financial year. But in any case, you have to inform to the department that there is an option given to us to make an application like this. So this option we are exercising, Volke, you have to intimate before filing the return under section 139(1). This is one aspect of it. Then friends, when we talk about application, what constitutes application? Before we get into that, whatever so far happened, the discussion, please make a synopsis of it. Taxation of charitable / religious trusts and institutions. Point number 1, section 11(1). Section 11(1). Income derived from property. Held under the trust. Wholly for charitable or religious purpose shall be exempted provided it is applied for charitable purpose. In India, charitable purpose in India, to the tune of 85%, then note, to the tune of 15% of the income from such property, of the income from such property can be accumulated to be applied for charitable purpose, in future. However, such accumulated income need to be invested in specified investments invested in specified investments covered under section 11.5, covered under section 11.5. Then friends, number 2, income from voluntary contributions made with specific direction, are to be treated as corpus donations, and shall not be included in the total income, Here try to understand one point, that is, as far as corpus donations are concerned, we are not including the same in the income. So there is no question or a need for checking whether corpus donations are being applied for charitable purpose or not. 85% of it being applied or not, that there is no need to make any checking. This is one point you need to. When you have to check whether 85% of it is being applied, first it should form the part of the total income. Then you have to check whether it is being applied. Once it is being applied, then the question of it getting exempted will arise. This is the fundamental difference between corpus donations and voluntary donations other than corpus donations and income from the property. For income from the property and donations without any specific direction, for it to get exemption, necessary condition is that it must be applied for charitable purpose during the previous year only to the tune of 85%. It's a point. Then friends, exceptions. In case, number 1, in case if the income got accrued but not received, till the end of the financial year, or number 2, income received at the fag end of the financial year, then SSC can apply such incomes, either in the year of receipt or in the year or in the year immediately succeeding or in the year immediately succeeding the financial year, immediately succeeding the financial year in which such income is received, in which such income is received. However, such a option is to be exercised. Such an option is to be exercised by giving in writing before the expiry of time allowed, before the expiry of the time allowed under section 139(1). Under section 139(1). What is 139(1)? Due date for filing the income tax return. In this context, at this point only we have to learn one aspect. There is a case, CIT versus Nagpur Hotel Owners Association, Supreme Court judgment. See, in one situation what happened? SSC filed his return before the due date, but he forget the point that he has to intimate in writing that these incomes are received either at the fag end of the year or only accrued but not received. We are going to make an application in the year of receipt or in the year immediately succeeding the year of the receipt. बोल writing में intimation नहीं दिए. So the assessing officer, without giving consideration for this particular fact, wanted to complete the assessment. Subsequently, it is found that the SSC failed to file this intimation before the due date, but he did it before completion of the assessment. So, will it be satisfactory compliance of the requirement? Point here is, Supreme Court says giving an intimation to the assessing officer by writing is only an administrative protocol. Of course, we will not excuse those people who come to the income tax department after their assessments gets completed. That is criminal. Because ये क्या है, बच्चों का खेल तो नहीं है ना. See, after I complete the assessment based on what you have filed, if you come and say I have got this right in the law, now I want to exercise. Too much irritating. But although in the law it is stated that such an intimation is to be filed before the due date for filing the return, we will excuse your lapse as long as such a intimation is filed before the completion of the assessment. In saying so, the good intention of the Supreme Court is, when somebody out of a charitable heart is giving the contribution, when another group is trying to do some charitable activity, we are not supposed to tax such incomes just for the sake of an administrative lacuna. Actually somebody accountant forget to give the intimation. But in any case, non-bailable, non-excusable crime is intimating after the assessment got completed is not something which we encourage. Write down this point. Note, intimation required under section 11(2), required under section 11(2) has to be furnished before assessing authority completes the concerned assessment. Before the assessing authority complete the concerned assessment. And in any case, intimations given after the completion of the assessments will not be entertained. Why it will not be entertained, friends? Then again the assessment need to be reopened. For your sake we can't reopen it. Okay, straight simple case. So this is what the Supreme Court judgment. Then friends, we will also try to understand this particular provisions which you have done with a small example. Listen the example. There is no need to write down or copy down, because our intention is not to copy. This is, I am saying, in reality and in spirit also, because these lectures are not aimed to copy anybody's work. The whole objective is only to make the students to be confident about the subject. All this content is available in your institute material, practical manuals and books of different authors. Let me come back. To tell you an example, a trust has got gross receipts from property held under the trust, say 10 lakhs. Voluntary contributions received from a donor is 2 lakhs. Corpus donations with a specific direction is 3 lakhs. And expenditure incurred on the activities of charitable and religious nature in India is 4 lakhs. See, basically you have got 3 incomes: property income, corpus donations and voluntary contributions other than corpus donations. Corpus donations anyhow we know are not going to form the part of the total income. So put together 10 lakhs of the property income and 2 lakhs of voluntary contributions, it is 12 lakhs. I can set aside happily 15%. So 12 lakhs के ऊपर 15% बोले तो 1,80,000. तो बाकी कितना है 10,20,000, whereas my application is only 4 lakhs. So remaining 6,20,000 you have to offer it for taxation. Let us suppose, continuing with the same example, SSC could not receive till the end of the financial year 5 lakhs of the income. Then happy well he can give an intimation that we are not in receipt of this income. The moment it is received, either in that year of receipt or in the subsequent year, we are going to invest it. Thereby from 6 lakhs 20,000, 5 lakhs you can reduce, and remaining 1 lakh 20,000 you have to offer it for tax. Let us suppose that 5 lakhs is received on 30th 6 2013. Then what need to happen? It is to be applied during the financial year of 13 and 14 or during the financial year 14 and 15. Suppose in 31/3/2014 they applied 3 lakhs and 1,50,000 they applied till 31/3/2015. Then the balance 50,000 which is not applied is going to be taxed in which financial year? 14 and 15. It will be taxed because the time we have permitted is what? 14 and 15, and you have only applied till 4,50,000. Remaining 50,000 will become taxable in 14 and 15 is a point. Now I move to the most interesting and also where the chance of your examiner questioning you, there are few points here. Application of income. When I say application of income, what constitutes application? What constitutes application of the income? Different situations we will see. First, repayment of the loan. Loan is taken and that money is used for charitable purpose. Now you are repaying the loan. Will the repayment of the loan taken to incur expenditure for charitable purpose, will it be amounting to application of the income? The answer is yes, provided earlier you have not shown the expenditure as application of the income. दो बार नहीं दे सकते. एक बार लोन लेके जब एक्सपेंडिचर कर रहे हैं वो वक्त भी आप एप्लीकेशन दिखा के अब रीपेमेंट ऑफ द लोन again you can't show it as an application. So this is one important point. Repayment of the loan taken by a charitable trust to carry out a charitable activity undoubtedly is an application of the income, provided you have not shown earlier on borrowing when you spend the money. If it is not being shown as an application, then repayment of the loan will become application of the income. Then some charitable institutions are established to lend the money to the poor students and to grant some scholarships and all. So when it lend the money, even such a lending of the money to the poor students is to be treated as application of the income, and whenever those poor students after studies get good qualifications like your CA and then repay that particular loan, on repayment it is again to be treated as income. On giving the loan we say it is application of the income, on receiving back that loan amount we call it as application of the income. Then when we talk about the application, friends, need not necessarily that the application need to happen in the revenue only. It need not be a revenue expenditure, it could be also be a capital expenditure. Without any specific direction, Deepthi is giving me 10 lakhs. I purchased a building to carry out from that particular building charitable activity. Even purchasing of a building also amounts to the application of the income for charitable purpose. In case if we don't read it, a layman understanding of application is what? Annadana, Vastradana. This only constitutes application. No. Intention here is what? Both such income can be applied for capital or revenue side. Then friends, today I got Kalyan Chakravarti Educational and Welfare Society for the past 14 years. We started another society, Jyoti Chakravarti Educational and Welfare Society. It is after all 1 year old. So anybody would like to give the donations to Kalyan Chakravarti Educational and Welfare Society. So Kalyan Chakravarti Educational and Welfare Society can very well donate this amount which it received to, what is it, Jyoti Chakravarti Education and Welfare Society. Because we want to promote that also. Because a charity has to happen in what way? दो हाथों से नहीं, चार हाथों से करना. Because where is this Jyoti Chakravarti Educational and Welfare Society? It is in Tirupati. Kalyan Chakravarti is in Hyderabad. So we wanted to do there also, and some people who have got big heart in Tirupati came forward and started with my ideology of doing a charitable activity there in Tirupati. So I take the donations, I give the donations to them. Giving donations like this to Jyoti Chakravarti Educational and Welfare Society, will it also amount to application of the income? Yes, it will. But it should be out of current year income, not out of the accumulated income. If I give to another charitable institution, it does not amount to application of the income. Then capital expenditure in purchasing the asset is a application of the income. Paying the taxes of the current year or past years also amounts to the application of the income. See, if we don't read and go, then all these doubts will come in the exam hall. Because the taxes once debited to the P&L account are getting disallowed, because they are personal expenditure. But when it comes to the point of the application, to check whether 85% is being applied, your capital expenditure will get into it. You are making the payment of taxes also, you can consider for that calculation of 85% of the application of the income. So when you are filing the return of a charitable trust, Krishna Reddy, preparing profit and loss account and are preparing income and expenditure account, and to see what is the income or expenditure is one aspect. Second aspect of it is what? Preparing an annexure to check whether 85% of the income is being applied for charitable purpose or not. When you prepare such annexure, all these points you keep in the mind, that revenue expenditure, capital expenditure, paying the taxes, ये सब क्या होगा? Application of income होगा. Then friends, it's not necessary that money should be actually be spent. Cash देके ही expenditure करने का जरूरत नहीं. I want to distribute the books to the poor students in my school. I can go to Krishna Reddy and take from him the books on credit basis. On credit basis, I can take the books, purchase the books and distribute the same to the poor students. Even if you don't pay in cash, incurring a liability to meet an expenditure also constitutes application of the income. So don't argue tomorrow with a client. To the extent of creditors, where you have applied, your cash is there in the bank itself. ऐसा नहीं बोलना, आज नहीं तो कल पे करते साहब, फ्री में दिए फ्री में दिए तो that will not come in the balance sheet in the last leg sir, it will come in the corpus or it comes in the income statement. वो डोनेशन नहीं है साहब, वो क्रेडिटर्स है, आज नहीं तो कल पे करते. आप वैसा कैसा बता सकते कि हम अप्लाई नहीं करें सो है. इट इज एप्लीकेशन. देन दोस्तों, repayment of a loan taken for construction of a building is also to be treated as application of income, provided the construction cost at the time of construction is not shown as an application, then repayment of the loan shall be treated as an application. So these are the things. Last thing in that application is depreciation which you are calculating on the fixed assets also constitutes application. Yes, for Deepthi, this is appearing like, ये क्या बात है साहब? एक बार आप depreciation को P&L में डला के प्रॉफिट को कम करा दिए. अब बाद में क्या बता रहे हैं? Application, depreciation also amounts to application. This is one angle. When I said like that, she woke up. No, that is not what I am saying, Mr. Chakravarti. On purchase of asset, anyhow you have shown it as an application. आप depreciation को भी बता रहे कैसा? Got the point? See, depreciation, what I am saying, madam, that is the amount is kept aside. आपकी बचपन में जब मैं आपको CPD में accounts बताए, what is the objective of depreciation? Setting aside the profits so that after this asset is going to be completing its useful life, again you are going to use this accumulated profit in the form of provision for depreciation to acquire the new asset. Probably this might be the good intention of the courts or the law to say, even the depreciation on an asset has to be treated as application of income for the purpose of section 11. But plainly if we look at it, appears that two times on the same amount we are showing it as an application of the income. So take the gist of the points, and please do remember, application of the income is a necessarily one important task in the charitable trust taxation as you move to the final. Write down. Application for charitable purpose. Application for charitable / religious purpose. Few illustrative points. Number 1. Application of the income can be for revenue or capital purpose. Can be for revenue or capital purpose. Number 2, expenditure on purchase of capital asset. Expenditure on purchase of capital asset amounts to application of income. Amounts to application of income. Then payment of taxes. Payment of taxes whether of current year or past years, amount to application of income. Amount to application of income. Then loans given to poor students. Loans given to poor students by educational trust. Amounts to application of income. Amounts to application of income. Note, on students repaying such loans, on students repaying the loan, again it will become income of the trust. Then friends, depreciation on the asset. Depreciation on the asset can be claimed as application of income. Even when the cost of the asset, has been fully allowed, as application of the income, under section 11, in the past years. Under section 11 in the past years. Then friends, it is not necessary that money should be actually be spent. It's not necessary that money should be actually be spent. That is, if liability for an expenditure is incurred, the expenditure would amount to the expenditure would amount to. Application of income. To application of income.